Thank you very much, everyone, and good morning here in New York. Good morning, everyone. Good morning. Good morning. We can do better than that. Come on, let's build some energy in this room. Good morning. Good morning. Well, I nearly didn't get to join you. Yesterday afternoon, I was in the UK at 29 minutes past 4. I had no passport and no plane ticket. So 8:30 this morning, I'm here in New York. That's the wonderful world of technology that we live in today. So while I was sitting there on the plane panicking about whether I was going to make the meeting or not, the conference, I thought a little bit about New York. I've had the pleasure of being to New York a couple of 2-3 times, and I always like to do a little bit of investigation as to, what's the culture of the city? The interesting culture I found was over 15,000 forms of life can be found on the New York subway. Most of those being bacteria. So a thought for that when you're traveling on the subway over the next few days. The other interesting statistic was the island of Manhattan was actually purchased in 1626 for the princely sum, or the modern day equivalent of $1,000 US. $1,000 US for this real estate is incredible. Now, if you wind the clock forward to today, if you want to run a hot dog stand at Central Park, they reckon the costs are about $400,000 a year. So $1,000 in 1626 and a hot dog stand today. Let's go figure it out. But the bit I really like about New York more than anything, and for those of you that have met me at the bar once or twice, is the whole cocktail scene. And going back to that bacteria, there was a cocktail on the menu the other night called penicillin. So if you go on the subway after Industry Connect and you want to get cleared and cured, then go have a penicillin cocktail. And it led me to think a little bit more about cocktails. Not that I'm myopic about cocktails, but there's 4 key ingredients to a cocktail. You need to have some alcohol in it. I don't do the non-alcoholic version of a cocktail. So something strong, bit of vodka, bit of gin maybe, bit of rum, bit of whiskey. You need something a little bit weaker to mix it up. So a little fortified wine or a little liqueur to pop in there. You need some sour. Bit of lemon, bit of lime, bit of orange, and you need some sweet. So you need some sugar and syrup. You take those 4 ingredients, you give them a good mix, and hopefully you enjoy your cocktail. So what about OIC here in New York? It's the OIC cocktail we're here at the general session to talk about. So I kind of think, number 1 ingredient, we need some customer stories. We need you in the audience to share your stories and your thoughts with the rest of the attendees here at Industry Connect. So tick, large measure of customer stories. We also need to hear from our partner community and all of our sponsors who have made this possible for us today. And we have a huge dose, a huge amount of partners going into that cocktail mix. And a big thank you to Deloitte, Accenture, Equisoft, Grant Thornton, Huron, PwC, Decisive Edge, UiPath, Bluepoint Consulting, Centric, Clever Services, Igabi, Invoice Cloud, Loxon, RIA, and the one I can't read at the bottom, BC. Sorry, I'll come back to that one. Big dose of our partner community into the cocktail mix. So we're starting to get a big drink going here. We then also need a little measure of Oracle technology and Oracle solutions just to make it a little more palatable for the Oracle people in the audience. So we'll drop a bit of that in over the next couple of days. And last but no means least, we need a huge, big dollop of a great audience. And I think we've got a great audience here this morning. What do you think? Great audience here this morning? You're really not awake yet, but we've got a great audience here this morning. That's more like it. So with that, we've now got our Industry Connect cocktail. I'm going to give it a good shake. I'm going to then introduce our first speaker of the day. And it's my great privilege to tee off Industry Connect by introducing Mr. Sonny Singh, who's the Senior Vice President and General Manager of the Oracle Financial Services Global Business Unit. So ladies and gentlemen, please welcome to the stage, Sonny Singh. Thank you.
I think I needed a cocktail after that introduction. I didn't know where Gary was going for a while, so I'm glad he segued into the OIC cocktail. Otherwise, I was ready to bring out my bartender lessons. Anyway, good morning and welcome. Really appreciate all of you joining, and we are very excited to host this event this year in New York City. This is, by any definition, one of the nerve centers of the financial services industry. So when the company decided to hold this year's OIC in New York, at least my team and myself were very excited. And by the way, that's really become evident in terms of how popular this destination was, because we have a record attendance this year. So we ran some analysis about all the attendees. We have close to 350 customers attending across 140 brands from financial services institutions. And you all have come from far and wide. You've traveled 500,000 miles from 138 cities in 30 countries to be here. So it's a very big deal for us, and we truly appreciate it. The interesting part is we went and mined some of the data, and this is nothing like Facebook, so don't get concerned about that. We actually looked at the amount of experience that's sitting in the room and sitting in this conference. There's 5,000 years of financial services experience. So we expect that many of you will get a chance to interact with your peers. You'll get to interact with our partners, some of the innovators that are working with us on our platforms, and hopefully you'll get tremendous value over the next couple of days. So let me start out by saying thank you, because I know that taking time out from your day jobs, all of you hold very important roles in your respective companies, and taking this time out and actually spending this 2 days with us is a tremendous show of commitment. It's a tremendous show of confidence, and it makes us feel a lot better about what we are doing day in and day out to be good partners to you. And once again, we really appreciate your support. I would like to underscore what Gary said. I want to thank our sponsors who have made this Industry Connect financial services track possible with this record attendance. So thanks to all the partners that Gary mentioned, especially Deloitte, who's sponsoring this session. Okay, so let me get into the meat of what I wanted to talk about. We've actually had a great year with you. So 12 months ago, I was up on stage in the last Oracle Industry Connect. Since then, we've had a tremendous amount of momentum, and let me talk a little bit about that. So over the last few years, we've continued to track how our impact as a company is growing on the financial services industry. Pleased to report that there's 26 billion banking transactions, 400 million loans, 37 million insurance policies that are currently sitting and being processed every year on our platform, with 1,200 customers in 1,200 customers in 140 countries around the globe. And we are being supported by a really vibrant ecosystem of partners, 180 partners across the globe. So all of this is coming together to help financial services institutions that we are working with to innovate, to provide better customer service, to provide the best possible capabilities as they move into the next generation of banking or insurance or capital markets. All of this is possible, this momentum is possible thanks to you. It continues to reinforce our focus and our core mission to help financial institutions grow in today's transforming landscape. A landscape that is characterized by the rise and the maturing of the digital customer, continuous increase in risk and regulatory environments, and a continuous threat from new entrants, whether they are traditional companies from other industries that are developing financial services capabilities, or new innovators. We continue to see investment rolling into the traditional fintechs, which are now become more or less mainstream, but we also see all companies from different industries coming into the financial services landscape, bringing new and innovative financial services to their customers, and they continue to become a new brand of competitor for you. Our focus has been these three things, and we continue to retain our focus here. Firstly, we are building the platforms and the architectures that help you re-architect your banks, your insurance companies around the customer. Secondly, we are looking at the tremendous amount of spend that you have invested. It's non-discretionary spend in areas of risk, financial management, compliance. And we are looking for ways and introducing technologies that help you optimize that spend, reduce it, but more importantly, get returns from that spend. And I'll talk a little more about it. And thirdly, as this financial services ecosystem gets more and more complex, it's now become important to understand not only how to compete in that landscape, but also how to collaborate and cooperate with emerging members of that financial services ecosystem. So how do you open up the bank to this notion of co-innovation? So our focus in financial services continues to be in these three major categories. So one thinks about what's out there in the horizon. When you look out to the future, what is the next generation of financial services look like? So we created a short video just to stir up your imagination. So let's roll that. So the words you saw was the future is pervasive. Financial services need to enter the lives of the customers. They're not going to come to you or into your channels and your institutions. You're going to them because you have to be where your customer is. It's real time. It's connected at all times, right? It's experiential, new technologies, new ways for customers to interact with you. And finally, it's intelligent. It's self-learning. These are some of the characteristics. And while 5 years ago, this appeared to be a bit like science fiction, we see all these technologies are getting more and more mainstream. And what's amazing is we are now starting to talk about things that were so inconceivable, the singularity, and now we're talking about it happening in the lifetimes of the people in this room today. So we have to prepare for the future. And what makes it very, very challenging is the fact that the half-life of these technologies, these transformative technologies that are fundamentally changing how we do business, those half-lives are getting shorter and shorter. So from the time there's a technology trigger to the time that technology becomes mainstream is actually not that much. And so you have to be fast, and you have to have the platforms that allow you to absorb these innovations and take them mainstream quickly. Otherwise, you're not keeping up with your competition. The future is here. It's not just evenly distributed today. So William Gibson, who's a futurist and a science fiction author, this quote really underscores this notion of how quickly these technologies are becoming mainstream, but everybody out there does not quite have the capability to absorb them. For all you gentlemen who are standing up, there are some seats up here in the front if you want them. This is like college, right? Nobody wants the front seats. Okay, all right. I'll keep going. So when we think about all of those elements that we described in the video about digital engagement, your customers are now ready to go beyond all of the cool digital experience capabilities that you've rolled out to them. They are truly ready for deeper digital engagement. What does that mean? So if you look at the classical digital experience that we've provided on various channels, whether it's the mobile channel, whether it's online presence, et cetera, that is more or less mainstream. It's what my 11-year-old daughter would say is meh, right? This is so mainstream, it's an expectation now. So you just can't rely on that being a differentiator. And we've seen that. We recently conducted a survey for 5,700 respondents in the age 25 to 35 demographic. And the results that we got were pretty interesting. So all of them expected that they will interact with their financial institutions in the classical digital channels. And their satisfaction with simple things like transaction services, transferring money from one account to the other, or doing consumer-like payments was reasonably high. And you would expect that because that's been a part of the focus of a lot of the work that we've done in the digital space today. But when you start to progress to more complex products, things like personal loans or home loans, that satisfaction with their primary financial institution starts to plummet. And what do we see? That 30% of them have started looking for alternatives, right? So this is the area which is much more lucrative for banks, but this is the area where your customers are starting to look elsewhere. Interestingly enough, trust with the institution and customer experience is still an important element of their decision criteria. So they are looking to get better experience in the process, but not just at the skin, but in the overall process as they get originated, as their accounts get funded, and as they interact with the bank through customer service channels. They are looking for a much higher quality of interaction that is information-driven and is frictionless. But when they don't see that, they go to some of these institutions that were born in the cloud and born seamlessly adopting some of the technologies that are available today. So the good news here is that it is actually interesting that whenever we think about these modern frictionless experiences, we tend to fall back to some of these newer companies that were born in the current age. Companies like, you could say, Amazon or Uber, or even a company like Netflix. It seems like an old company now, but we think of these companies and say, these are companies that were born in the cloud. They were born with modern experience as a part of their offer. But the interesting news here is that it's just not their domain. With the right focus, very traditional brands are actually doing a marvelous job of transforming this customer engagement and customer experience. So let's talk about a few of these, because these really stood out to me that this is just not newfangled companies that can do this. Very traditional companies that have been around for decades are transforming themselves. If you look at Nike, Nike is a great example. It's a 54-year-old brand that was born in the baby boomer generation, but they are ultra popular with the millennials of today. And they are ultra popular not just because of their brand image, but because they've entered their customers' lives through being a participant in their healthcare and well-being. They have applications that allow you to monitor your health, to track your physical activities, and they use that to participate and make offers at the right place at the right time. T-Mobile, they have been continuously enhancing their ability to look at their data around billing, around customer service, to anticipate customer churn. So when they find that there's a possibility of defection, they can zero in on that and provide an offer that prolongs the life of their customer on their services. Sephora, another 50-year-old company in the cosmetic space, has completely brought to life an omni-channel customer engagement, allowing customers to really experience the products before buying them. And finally, Walgreens. This is a classical example of a company that has extended its services to a broad set of innovators. So if you look at photo applications, Walgreens provides its quick print services through APIs so that any of these photo apps can actually print to any of the Walgreens stores around, geographically dispersed Walgreens stores. So what does that do? It increases foot traffic into the store. It increases their revenue from not only that service, but what then the customer can buy when they come in. And simultaneously, they're sharing that revenue with those photo app providers who are actually storing and investing in the photo software that their customers are using. So it's brought an ecosystem together. So here are examples of very traditional companies. I mean, Walgreens has been around for more than 100 years. So I apply the same logic to this industry and say, the average age of the banks that are attending this conference is 74 years. We actually looked at that. The oldest bank here in this conference is more than 300 years old, right? So the fact that these are very traditional brands that have been around for decades and in some cases centuries, they all have the ability to modernize and bring this type of evolution in their business models by adopting the right type of technologies on their platforms. But that requires some work. And it's our belief that there are two fundamental things that every financial institution has to look at. It has to look at their digital platforms. What are the fundamental capabilities that they need in order to transform and revolutionize their customer engagement, customer service capabilities? And the second is how they look at their data assets and how they focus on monetizing them. And this is an area I talk about every time I get an opportunity to speak to customers, because I think this is and will be the hardest thing that banks will do or insurance companies will do over the coming years. Why is that? So first, let's look at the digital platform. If you look at a traditional core architecture for financial institutions, it looks something like this. You have product-oriented systems that are serviced by very traditional channels, right? The problem that we see with this is that these systems pretty much fragment the customer across the board. They also are older, typically, and were written in a time when none of the transformational technologies that we take for granted today, things like mobility, social capabilities, big data, Internet of Things, all the buzzwords you can imagine, none of those existed. And they're not designed to absorb these. So what did we do? When we were reimagining our banking capabilities, we actually did three very significant things. Firstly, we pulled anything to do with the customer out of the core. We created a new core that we call the digital engagement layer that contained all the customer-centric processes, things like selling and marketing to the customer, originating the customer, the product and pricing capabilities, limits, collateral management, party, all of these things were abstracted out. The second thing that allowed that to do was to thin out the core systems of yesterday and basically de-risk them. So you could then, they basically became accounting engines that you just needed to manage and potentially replace when there was a business case to do it. And then the third thing that we did was we basically took all of the channels and extracted all of the access requirements. We created a brand new digital experience layer that could actually be rendered on any channel. So we provided access services, transaction services, and made them available through RESTful APIs so you could build these services once or absorb them from us and render them on any channel or access point that your customer needed. This now becomes a platform that allows you to incorporate technology very, very quickly. And because we've taken each of these components and built them on very fine-grained services and componentized them, you can undertake what we call progressive transformation. You don't have to do large-scale 10-year, 7-year projects to transform the bank. We did something very similar with the data platform. So we brought together in our data platform all of the elements of finance, risk, compliance, and customer information into a single physical model, which we call the Oracle Financial Services Analytical Applications Data Foundation. It can take data from any source, whether it's enterprise data that's stored in a relational format under your core systems, or it's data that's coming from a variety of sources on the web. It can also take data real-time, data like location data, social and web activity, geolocations, market feeds, bring them all together through data streams through our inline processing engine into the data model. So we have one place where we curate and manage all of the data. And from here, then, using our application infrastructure, analytical application infrastructure, we are able to render all of your analytical application needs. Your risk and finance requirements, things like funds transfer pricing, things like balance sheet planning and finance, profitability management, CCAR, and Basel and risk, and also all your compliance applications, KYC, AML, fraud, your broker compliance, analyst compliance. All of these products can then be run off of a single place. And we provide 75 of these products sitting on this foundation. We also have extended this with modeling and machine learning capabilities. And we are delivering a number of actionable insights and actionable alerts. Things like next likely offer, things like real-time pricing, integrated risk and finance. All of these capabilities are being delivered from a single data platform. So these two have been tremendous, have required a tremendous amount of R&D and investment from us, but we now see these running in more than 80% of all the global SIFIs and more than 500 customers across the globe. So now that you have these type of platforms in place, the idea is how do you bring more and more innovation into these platforms? And every day we see a new buzzword come up in this industry. And we are all inundated by buzzwords. And the typical pattern that we see is when a particular technology trigger happens, you get suddenly very nervous because you think everybody else is doing it and you're falling behind. And frankly, 6 months later, that does become a reality, or 12 months later, it becomes a reality. So the idea is, how do you move from all of this inundation of buzzwords and use these technologies to actually generate business outcomes, so moving from buzz to biz, right? How do you do that? And that's where you can work with companies like us and your partners, your technology partners, to adopt things that we are doing really, really well, bring them on board, and then start to use them to drive your innovation, to drive your differentiation in your marketplace. So I thought I'd take a couple of examples of that. So in the area of banking, we are starting to convert these platforms, these digital platforms, into smart platforms, which means we are using machine learning models for a variety of different things. This could be something as simple as credit decisioning. So looking at people who don't have a traditional credit history profile, how can you use data to actually create a risk profile so you can actually make them real customers and understand the potential risk that surrounds that customer. You have millennials, immigrants that come into the country, they do not have history. How do you make them a part of the financial ecosystem? On the other end of the spectrum, we are talking about hyper-connected payments. We are seeing new standards that have emerged over the last couple of years, whether this is Swift GPI or ISO 20022. These are the new message formats that are accommodating a much higher volume of both consumer as well as corporate payments. We are actually incorporating these standards into brand new payments platforms, and we are enabling many of those capabilities with blockchain frameworks. So we have released now a blockchain adapter for cross-border payments. So bringing these type of technologies into real use cases so that you can absorb them and use them as a part of your innovation cycles. Similarly, we've talked a little bit about it, more than 1,500 open APIs across a variety of different areas, things like current and savings accounts, customer onboarding, term deposits, wallets. We've made all of these APIs that are REST-enabled available in an open ecosystem. And I'll talk briefly about a hackathon that we recently did, and we had invited, I'll go there soon. Let me just jump there for a second, and I'll come back. There you go. So we brought in 13 of these fintechs into a hackathon over the last few weeks. We enabled them on Oracle's Startup Cloud Accelerator, made all of these APIs available to them. And it's impressive. Some of these companies are working in areas such as AI. They're working on credit decisioning. They are looking at a variety of different end applications. And we're actually showcasing these in the Connect Zone downstairs. So as you go through the conference, please go engage with them and see how an open ecosystem can enable a variety of different companies and how you can then bring these companies into your financial ecosystem and provide services by opening up your core services combined with these companies to your customers. So that is one of the areas that we are creating a lot of innovation around. Can we go back 2 slides, please? So in the analytical application platform, we've incorporated many new technologies. I'll mention these briefly. Obviously, machine learning continues to be a very dominant model. And the idea behind these is to bring these across financial crime, across risk management and compliance management. We are also using very modern scale-out technologies built on capabilities like Apache Spark. We have Oracle Graph Analytics, something that's just come out of our labs. We've incorporated that into our fight against financial crime. And the idea behind this is you can actually establish very visually the flow of money through a complex network of entities. So if you go forward 1 slide, if you look at what we are doing in the area of financial crime, we are really strengthening the capabilities of companies using all of these modern technologies. So not only are we using graph analytics to provide a visual representation of the flow of money, we are using machine learning models to score alerts so that you can optimize alerts that you truly need to focus on and eliminate false positives. You are able to predict next best actions using robotic process automation. And finally, we are using a variety of data-driven models to simplify the whole process of submitting suspicious activity reporting. This is an area where most banks end up spending a large amount of their non-discretionary budgets because it is labor-intensive to prosecute each and every alert that comes out of the system. So these are some of the examples where once you put in well-defined platforms for your digital engagement and digital experience, for your data, then you can start to incorporate technologies like blockchain, like machine learning, and bring them to life with real capabilities that create returns. I'll mention a few examples of this. So an integral part of our philosophy is to do this innovation in action. I would mention 3 or 4 examples. How do we help traditional players modernize and launch these type of innovations quickly into their ecosystem? How do we empower digital entrants to successfully launch new business models? How do we enable partners to bring new propositions to market? And finally, how do we promote this vibrant ecosystem of new innovators collaborating with traditional financial institutions to create a broad spectrum of financial capabilities that they can take to their customers? So we just started work a few months ago with Wells Fargo and ran a very successful prototype with them for cross-border payments on the blockchain. We are working with a variety of different challenger banks across the globe. Some of them are coming from very traditional companies. So an example is Airtel, which is the 22nd largest telco in the world, the biggest telco in India. They launched a challenger bank, and they brought it up and running in less than 6 months on our technology. We are working with Optum to bring next-generation healthcare services on the cloud so that many of the new health care providers and payers can start to modernize, and they can adopt and absorb technology very quickly. And finally, one of the featured partners that you'll see here is Mead, who's working with us. They're a provider of social banking capabilities, and they're working with us to actually deliver banking as a service with some of our integration partners like Accenture. So we are bringing all of this through real-life examples to our customer base. I talked a little bit about this already. So a lot going on in Oracle Industry Connect. We have a large number of partners. The cocktail is really ready to be consumed. So let's talk a little bit about that cocktail. Can we roll the second video? Superb. So as you can tell, we have an action-packed 36 hours for you, and hopefully you'll get a tremendous amount of value.